Welcome back to 1600, and it's now time for a special on Wednesdays, Mythbuster Wednesday. Today, the Treasury Department rolled out a program of stress tests for banks with more than $100 billion in assets. Treasury officials say the test will be completed no later than April. As if to guard against the charge it is being soft on the banks, the White House today also announced regulatory reforms intended to keep the economic crisis from happening again.
Let me be clear. The choice we face is not between some oppressive government-run economy or a chaotic and unforgiving capitalism. Rather, strong financial markets require clear rules of the road.
In the meantime, to get part of our financial sector out of the ditch, several economists are urging the federal government to nationalize failing banks. But some critics say that nationalization is a form of communism. Joining us now to bust that myth is Daniel Gross, senior editor at Newsweek and author of Dumb Money: How Our Greatest Financial Minds Bankrupted the Nation. Dan, does nationalization even approach communism?
Well, of course not. And, you know, we hear a lot of talk. We hear this actually from the Obama administration, from his people, from the White House, and from a lot of people in Congress that nationalization, it's just not how we do things in this country. We can't do that. To have the government running something even for a short period of time is just unthinkable. In fact, we've nationalized banks and financial institutions at different times through our history, and we do it quite frequently. In 1984, Continental Illinois was the 8th biggest bank. It failed. FDIC couldn't handle it. The government took it over, took 80% of the stock, put in new management, and essentially ran it for 6 or 7 years, selling off pieces of it until by 1991 it was totally done with.
And Dan, I gather that there are already some 15 banks that the FDIC has taken over already this year.
Right. Well, pretty much every Friday afternoon after the markets close and after, you know, a lot of the news cycle has shut down, the FDIC announces that it has seized a bank that, you know, can no longer function, that has lost so much money it can't meet its obligations. So what does the FDIC do? It comes in, it takes it over. Frequently, almost instantaneously, it places the deposits and the branches with other banks, but sometimes it takes several weeks, or in the case of IndyMac, it takes many months to do that. In the case of IndyMac, which was a very large bank that failed last year, the FDIC ran it for 6 or 7 months. You might even say it was nationalized for that period of time before finding a buyer.
Dan, when the government acquires common stock in a bank, what are the risks and rewards?
Well, the risks, you know, in theory, the risks for the shareholders are that you will have government bureaucrats running it and making politicized decisions about who gets credit and who doesn't. But that's not the situation we're in right now. You take Citigroup, which is what all this talk of nationalization revolves around. The taxpayers have essentially put $40 billion into the company. The stock market values the whole company today at $11 billion. So the stock market is telling you that it doesn't think much of Citi's prospects and of the investment we've already made. Citigroup's management last weekend was asking the government to convert the money it had lent Citigroup into common stock, basically saying, hey, maybe we won't have to pay this back, but we can just consider this stock. But they don't want the government to have any say in how it's run. That, for taxpayers, is kind of the worst of both worlds. We're putting our money in, but we don't have any say over how we get paid back or how things get run.
There's a political play here, as you know well, that when critics of nationalization compare it to communism, it frightens people, and perhaps maybe the intention is to strengthen the case against federal government involvement. Take us through, though, whether or not you think, in your own sort of political analysis, that works.
No, look, when we talk about nationalization, it's not the government taking over the bank so that it can operate it for the next 20 years. I mean, that's what happened in France in the 1980s when they just said, you're a private sector bank, now the government's going to own you and we're going to make the decisions. The reason we have to nationalize banks in this country is because they've essentially failed. And when they are so big and they've failed and the FDIC can't handle it, we need some extraordinary means, basically to find buyers for pieces of the business that people want, to absorb the losses that shareholders have already suffered and that bondholders are likely to suffer, and to allow the system to get moving again.
Daniel Gross from Newsweek. Dan, I think if Timothy Geithner spoke even half as well as you do, our markets would be a lot more confident in what's going on, and this simply wouldn't even be an argument over what nationalization is. In any case, if it's Wednesday, it's Mythbuster Wednesday with Newsweek's Daniel Gross. Dan, thanks for coming on.
Thanks. I don't know about that, but I appreciate your confidence, David.
Okay. Tonight in our call for...